Hello, thanks for joining our Media and Marketing Services M&A Market Update. I'm Paul Winterflood, lead partner of the Media and Marketing Services Corporate Finance team. We advise businesses looking to sell or make acquisitions and work closely with other media sector experts and our accounting and M&A tax team, offering a comprehensive full-service approach to transactions. I'm going to review M&A activity in the media and marketing services sectors in the first quarter of 2023, looking at trends, notable transactions, before making predictions for the period ahead. Firstly, for those new to these, we track transactions in the media and marketing services sector involving a UK buyer or a UK seller, which we use as a basis of this analysis. If we go back to the end of last year, there was significant uncertainty about the period ahead off the back of political and economic woes. There were widespread concerns about what the M&A market could look like in 2023. And what we've seen so far is that there certainly has been some turbulence in the market, and certain subsectors such as production definitely experienced a tough market. However, as you'll see from the graph, the first quarter of 2023 was in fact stronger than any other period post-COVID, meaning the M&A market has defied predictions. But what has been driving this? Firstly, the networks. There was a notable increase in the networks acquiring agencies. The last few years, barring Havas, who have been relatively acquisitive comparative to the other networks, acquisitions have been few and far between, and where acquisitions have been made, they were predominantly of MarTech and technology solutions. In quarter one, aside from Omnicom, all of the major networks made acquisitions. This could have been a result of them being able to be more competitive pricing-wise relative to more leveraged PE-backed agencies off the back of the interest rate rises that we saw in the autumn, or it could be that the networks are more externally focused again, having restructured their agencies internally. In terms of deal size, one of the most notable transactions this quarter was the acquisition of Tag by Dentsu for a reported £500 million, their biggest deal since acquiring Merkle. As we discussed on previous updates, influencer and social capabilities are both highly sought after. This remained the case here, with these highlighted transactions, the acquisition of HRZN by Havas, and obviously Goat by WPP being a few. Goat is of note because it was also previously owned by private equity house Inflection. A second trend that we identified at our previous update was private equity exiting to trade or to a secondary private equity house. This is where a private equity house sells their stake to another private equity house. Whether trade or another PE house is the likely acquirer will dictate the direction of travel in the market in the next few years. There are a number of private equity-backed groups that took on private equity investment between 3 and 5 years ago, and they are likely to be looking for new owners shortly as the private equity cycle comes to an end. Our expectation is that specific capabilities like Goat may to exit to trade, but the broader digital services groups, Brainlabs for instance, are likely to be sold to another PE house, kicking off a further wave of bolt-on activity. So on the topic of private equity, this will be a familiar chart to many of you. This chart tracks the number of transactions or the proportion of transactions that have private equity involvement, either directly, where a private equity house invests in a group, or indirectly, where a private equity-backed group acquires another agency. At the end of last year, this proportion dipped to under 50%. However, the post-COVID status quo has resumed, and the number of deals with private equity involvement has increased back up to 56% this quarter. What was driving that slowdown in quarter four was that many private equity houses were taking stock after the interest rate rises, considering the impact the interest rate increases were having on valuation, and have since returned to the market. The take-home point here is that if you're looking to sell your business, the chances are that you'll be selling to private equity either directly or indirectly. And the concept of being owned by private equity is a topic we often talk about a lot with our clients. In terms of some of the private equity-backed transactions that we want to highlight, here's a few of them. The digital services groups such as Crowd and Brainlabs, for example, were quieter this quarter. However, there were still a number of interesting PE deals to highlight. Gaming is definitely a hot sector, and Living Bridge portfolio business Bonatus acquired AdInplay, an ad tech platform for gaming, demonstrating how the different medium subsectors are still interacting. In more traditional agency world, financial comms agency Tulkan was acquired by CVC-backed Teneo for $65 million, demonstrating there's definitely a market for PR agencies with scale and defined target markets. Finally, looking at the mid-market groups, this area of the market was definitely quieter this quarter, but still there were some notable transactions here. Probably the most talked about was Brave Bison's acquisition of Social Chain due to the Stephen Bartlett connection. Off the back of this, Brave Bison's share price increased 27% over the quarter, the leading performer of the listed agency groups that we track. In a world of higher interest rates, listed groups in particular may become relatively more competitive to PE acquirers. Finally, moving on to the outlook. We are optimistic that the market is going to remain strong, if not strengthen over the coming quarters. Even though the numbers show a very strong quarter, it was definitely more turbulent than the previous 12 months, with more buyer nervousness, particularly out of the US. As interest rates stabilise and hopefully fall and the economy recovers, we are confident of a strong market over the coming years, with a combination of strong private equity interest backed up by the resurgent networks should hopefully lead to plenty of opportunities for transactions. The type of acquisitions will be twofold. Certainly there will be scale creation. Additionally, there will continue to be transactions targeting specific capabilities that acquirers are looking for. In particular, digital capabilities in the e-commerce, influencer, gaming space, as well as digital transformation capabilities, as well as purpose in ESG. I hope you enjoyed this market review. If anyone has any comments, feedback, questions about the content, or considering a transaction, please don't hesitate to get in touch. Thank you.